Macy's is delaying its third quarter earnings due to an investigation. The company says a single employee responsible for small package delivery expense accounting intentionally made erroneous entries to hide about $132 to $154 million of expenses. Macy's says the employee no longer works for the company. Katie?
Yeah, I can't get enough of this story. It is truly wild. So let's get into some of the details now with Mary Ross Gilbert of Bloomberg Intelligence joining us from our LA bureau. So you had the distinct pleasure of waking up to this news and put it into context for us. When we think about these hidden expenses, what does it actually mean for Macy's business?
Yeah, it was incredibly unfortunate to learn of this accounting error, this hidden expense. It's like you said, it's 132 to 154 million. It does cover a 3-year period, and it's a cumulative figure. So what this means is that the impact on earnings could be somewhere around 20 cents a share on average per year. So I think the way to really look at it is it does not impact cash. So that's the good news. But the bad news is what happened with the financial controls. And we're going to learn more when the investigation is complete. And of course, this caused a delay to their third quarter earnings. But there were some good news out of the third quarter earnings. One is their comparable sales on an owned plus licensed plus marketplace basis was down less than analysts expected. It was down 1.3%. And analysts were looking for that to be down 1.5%. So it was a tad better. And we think that's a good measure of the business. And we think the go-forward figures, and what that reflects is it excludes 150 stores that are slated to be closed over the next few years. And those figures show that comp sales were down 0.9% on the same basis. And so that's encouraging that the trends are better. And even better than that are the go-forward stores. These are the stores where they're adding back service into shoes, handbags, and ready-to-wear. And this is boosting sales. So their comp sales for those 50 stores that they've refreshed with better brands, merchandising, those were up 1.9%, and it's the third quarter of an increase. So it's showing signs that the management's plan is working. It just needs to happen across the rest of the go-forward store base under the Macy's nameplate. And then, of course, if you look at the luxury side of the business with Bloomingdale's, comp sales were up 3.2%, again on that same basis we mentioned earlier, and Bluemercury up 3.3% for the third quarter.
Why is, and I, admittedly don't know a lot about, I was going to say supermarkets, department stores, Mary Ross, but I'm looking at, the total market cap is less than $4.5 billion, and yet they're expected to show sales revenue of more than $22 billion this year. So why is this company trading at less than, 0.25 times sales?
Yeah, so that's a good question, Matt. And the reason for that is because the trends have been negative. If you look at the top line, they've lost market share. And who are they losing market share to? Likely to off-price and to a certain extent the mass merchandisers like the Walmart and Targets of the world, except for Target didn't have good earnings in the third quarter. Another thing to note about the third quarter is most apparel retailers are seeing weakness because there was unseasonable warm weather. Plus, we also had the impact of a few tropical storms and hurricanes in the quarter that also impacted sales for most companies. So one thing that Macy's noted is, guess what? November to date, our sales trends are better than they were in the third quarter. And this is something that we've been seeing across the board from retailers that are reporting.
Yeah, well, let's talk about that a little bit more. Bloomberg Television spoke to the CEO of Bloomingdale's. Let's take a listen to that now.
I really do think that actually the department store model has a bright future, but it has to reinvent itself from the perspective of the customer, but also from our brand partners. We have to be relevant for our brand partners and rethink the model from this point of view.
Now, I thought that was interesting for two reasons. He has the Wicked merch behind him, and that movie has just been so grossly overpromoted. That's one thing. But the second thing, which I want to ask you about, is this idea that the department store model needs to reinvent itself. I mean, you think about the competitive landscape right now. Do you agree with that?
Absolutely, Katie. That's been an issue for some time, right? Because if you look at the trends going back to the peak for department stores and sales was probably about 2015. And since then, there's been a decline. So you've seen a lot of store closures. You've seen exits from the market altogether. So it's clear that the model needs to evolve. So when you think about going into a big box operator, it's a destination type experience, and it's via the malls. So that means you have to park and you have to walk a long way. So how do you make yourself more relevant? So now the A+ malls are doing really well. And of course, Macy's locations in those better malls are doing better. So that's why they're going to be closing more stores, and thus the 150 slated for closure. So I think you need to have a smaller box. It needs to be highly relevant. And we've been seeing under Tony Spring, he was the former president of Bloomingdale's, and he's the one who really took Bloomingdale's and evolved it, bringing in all these new brands. And it's been a good performer for Macy's. And so now he's heading up the entire company. And I've seen the improvements in my channel checks at the stores here in Southern California. And I think it's improving, and there's still more to go. I see that, but I think there's possibilities to really reinvent the department store. And we're seeing some good news with Nordstrom. They seem to be executing better with their full line stores. Their boxes tend to be smaller. They have a lot less of those stores than of Macy's. And those stores are located in those better locations as well. So I think we're seeing better results there, and plus they're benefiting from having an off-price business, so they're gaining market share there. So that also helps.
All right, Mary Ross Gilbert of Bloomberg Intelligence, really appreciate you joining us. Hope we can get you back.